So it's with some children right back here, and in this lesson, we want to be looking at part two of creating your own strategy, your own trading strategy. In this video, we are going to be looking at a primary indicator, right? So let's dive in and see what this primary indicator does. So the primary indicator provides a second signal within a trade. Okay. So we are looking at the primary indicator. So a primary indicator is a trend indicator, because when you're creating your own strategy, we agreed and said that what we need is this major move that makes a trend. Then we avoid these consolidations, then pick this one, avoid this consolidation, then pick those moves. Okay. So we are trying to avoid this. Then we want to be able to capture these moves that create, and because that is where you make the money from. Okay. So primary indicator is a trend indicator. It can be an indicator on a chart, or it can be an indicator in the indicator window. So we agreed and said that on a chart, there is always two sides. There is a side where you're going to see your chart. There is a side where you're going to be seeing indicators only. So on this side of the chart, you can put some indicators, or some indicators can go in the side of indicators. Okay. So a primary indicator can be a two-line cross indicator or a zero-line cross indicator. So a two-line cross indicator is an indicator which is made up of two lines, where one is always moving faster than the other one. So when the faster line crosses above the slower line, for example, like here, that becomes a signal to buy. And when this faster line closes below the slower line, it becomes a signal to sell. So that is what we call a two-line indicator. So there are always two lines. When one line crosses the other, that is when you get a signal. Then we say that a zero-line indicator is whereby this indicator moves on. There is a zero line. When it crosses above the zero into the positive side, that one becomes a signal to buy. And when it crosses back into the side of the negative, there we get a signal to sell. So that is what we call the zero line indicator. So two-line cross indicator sometimes perform better in general. Okay. So the primary indicator should be able to filter out some losing trades provided by the baseline in case any. And do not forget, we also make money by not losing money. So we are saying that. So we say that baseline is a line on the chart. Okay. For example, this is a chart. You will always have a line that you're going to put on this chart to show us the direction. So for example, we get a signal to buy. Okay. And then after getting the signal we buy, we have to verify it with what we call the primary indicator. Maybe it is an indicator panel. So if the primary indicator is also saying that we should buy from that level, then that is when we do take a buy order. Okay. So, and the vice versa is also true for selling. So right now, we are still looking at the primary indicator. So the indicator should be as simple as possible to read, and complicated indicators do not necessarily provide holy grail signals. So sometimes you find people with charts which, for example, you find a chart whereby you cannot even see what is happening because they have put so many indicators on them. So this is always vague and it will never work. So the simpler the indicator, the better it becomes. So right now, we are going to move on to a chart, then look at this primary indicator, and then how to choose the best primary indicator for you. So hi everyone, we are right here on to a live chat, and at least I think everyone can be able to see that we already have two moving averages on the chart, this green and then this red moving average. That is those are two moving average, and this is the chart side that we have been talking about. Then this is the indicator side that we have been talking about. So we are saying that the baseline, as we agreed in video 1, part 1, the baseline is always placed in this chart side, and then maybe on the other side you can put your other indicators. So we are looking on the primary indicator. So before you go any further, I want everyone to note that this is the Aussie New Zealand chart, and it is on a daily time frame. This is the D, okay. And then we have this indicator right down here. This is called the moving average of oscillators. So it is a built-in indicator. It is not a holy grail indicator like anyone would love to think. So when look at the chart, of course, we agree that on the chart we are supposed to put a baseline. That is part 1. So for example, let us choose a baseline. Let us remove what has been on the chart because it is not part of what we're studying. So right now you can check on a chart. And then you see that this chart is a plain chart right now. So these are daily candles. Every candle takes 1 day to form. So we are going to insert on a we are going to put on a moving average to act as a baseline for now. Let me turn off my data for a moment. So we are going to we're going to insert in a baseline. For example, you can use an moving average. Moving average. Let me say we use the moving average of 100. Okay, 100, and then maybe let it be exponential. It doesn't matter. This will be depending on what you prefer that has given you positive result. Okay, so let me change the color to blue maybe, then click OK. So I zoom out a little bit. So you can see that this is a baseline, and we say that every time the price crosses above the baseline, this is a buy signal, and when the price crosses below the baseline, that is a sell signal. So the purpose of the primary indicator is to confirm the signal provided by the baseline. Okay, if the baseline is saying that we are going up, but the primary indicator is saying that we are going down, then that is a contradiction, and we do not take that trade. But if the baseline says that we are going up, and then the primary indicator says we are going up, that is a good signal, and then we are good to go to prove the signal. So right now we are on the primary indicator, so we want to try out some indicators that are built into MetaTrader 4 so that we can be able to choose which one will work for us. So let us put on the MACD, for example, to act as our primary indicator. That is under oscillators, moving average, convergence, divergence. Okay, so if you do not remember how to use the MACD, we agree that when the MACD produces a line, okay, a line above the zero line, the zero level, sorry, right here, that is a signal to buy. And when it produces a line that is in the negative side, for example, right here, that is a signal to sell. So it is a zero line cross indicator, this MACD. So when it crosses above the zero line, buy, and then below the zero line, it is time to sell. So we want to try to figure out and say, for example, we have chosen this MACD as our primary indicator. Will it suit our criteria of trading? It has to filter out some trades. It shouldn't be too slow. That is number one. It shouldn't be too slow to pick a signal, and then it shouldn't be too late to pick a signal. So, for example, when you look on the chart, we are looking for the side whereby the price has crossed the baseline, and then we have also a confirmation signal with the MACD. Let me try to zoom in so that everyone can be able to see clearly. Okay. Let's go back into history. So for example, when look right here, we have some signals. So you can see that right here, we had a short signal. Okay, the price has closed below the baseline. And then even the MACD is saying that we should go short. So if we took this trade, of course, we would have made a loss. Okay, so that is a clear loss that the baseline and the primary indicator of both. So when you get a signal of selling from the baseline, you confirm on the primary indicator. If the primary indicator is saying that we are taking the trade, then you have to take the trade for the moment because this is level 2 now. So on here we've checked the baseline is saying we sell, and then the MACD is also saying that we sell, so that trade is good to go, though it was a losing trade. So you come here, for example, right here, you have the price has closed above the baseline. So the baseline is saying that we are bullish for the moment. But when you check on the MACD is saying that we are bearish. So this is our primary indicator for the moment. So do we take that trade? Of course, we do not take that trade. So you can see that now our primary indicator has been able to filter out this losing trade. Okay. So when you come here, it is saying that we are going short. That is a baseline. And then the MACD is also saying that we are going short. And then we would have caught some small pips for the day. So when you come here, it is saying that we go up. Okay, the baseline is saying we go up. Then you check on the MACD. That is our primary indicator. Is it saying that we sell? For it is saying that we should sell. And then we do not take that trade. We want to get a sequence whereby the baseline is saying buy. And then the MACD is also saying buy. So when you come on this signal right here, the price has crossed very well below the baseline, as everyone can see. And then when you look here on the MACD, it is saying that no, we are not going to take that trade. So do we take that trade? Of course we do not. Okay, so we wait for the signal to come onto the primary indicator. So the baseline is saying that we are going short, so it is a tick. But the primary indicator is saying no, we are not. We are not supposed to sell at that moment. So what do we do? Baseline is saying we sell. So the primary indicator, we have to wait for the primary indicator to tell us to go and I sell. So the primary indicator told us to go and sell on around this candle right here. So that is that was the entry candle. Okay, you come and put here your sell stop order, and then you put your stop loss at 1.5 of the ATR, and then you capture the move down. Okay, so that was a good trade to take. And then the other thing, you can see that this primary indicator, the MACD as a primary indicator, you can see that it has been able to filter out this retracement here. It has not changed its direction. Okay, that confirms that a MACD can be a good primary indicator. So you can still see that right here. When you look at the chart, the default settings of the MACD is 12. You can see that the default settings is the 12, 26, and the 9. So these are the default settings. So you can try to alter the settings to fit the settings you want. And then you can see that it has still filtered out this big retracement. I don't know if it is a retracement or it is a change in trend, but as long as the indicator tries to avoid such big retracements, it becomes a very good indicator to go with. So this is the MACD as a primary indicator. Can it work for us? Or maybe it can. If it does not suit to be a primary indicator, can it work as a secondary indicator? We shall be able to see in the next video. Okay, so you can see that right here, the price closed above the baseline. Okay, and the price is supposed to be within the 180 zone, like we agreed in the first video. And then the MACD is also saying that we are bullish, so we had to take this trade and then move up. So you can see that here we got a big retracement, and then the MACD also gave us a short signal, so we got a losing trade. And then here you got a bullish signal, and then you had to buy once again. Okay, so that is how to use the baseline and the baseline and the primary indicator. So here let me try to change into a different baseline, and then we see. So you can see that we have this baseline on the chart. It is Kijun Sen, and here right down here we have the moving average of oscillators, or SMA. So you can see that from here it gave us a bullish signal. The baseline saying buy, and then the primary indicator is also saying you buy. So there you go, and then you take that trade. So when here you get a sell order, and then even this one saying that you get a sell order, you get the move down. Okay, so like that, like that, like that. So that is how you combine your baseline with a primary indicator. So what you do is simple. You keep on testing each other. So when you say that this baseline is a good one, so for example, we said you can use moving average crosses as a baseline. Okay, let's try to look for moving average cross if I have it. If I have it. Moving average crosses. I'm not saying it, but we can try to figure out with any baseline that you choose. We said that the number one rule you have when you're choosing your baseline, the baseline is supposed to make at least 70% win rate. That in every 10 trades you backtest it, it makes a win of 7 trades. Okay, and then the baseline is the basis of the strategy, because now you can see that here it is saying that we should go and buy, and then our primary indicator is also saying that we should go and buy. So from there, you can take that trade. So let us try to see as a two-line cross indicator. Let's delete away this one as a baseline. Let us insert an indicator, for example, a custom indicator. We can use like this one. Input says okay. You can change the color. So pure up. Okay. So this is a zero line. This is a two-line cross indicator, as everyone can see. Let me try to change the color here to red so that it can be seen clearly. So everyone can see that when the red line crosses above the green line, it is a signal to buy, and when the red line crosses below the green line, it is a signal to sell right here. This is what we call a two-line cross indicator. So that the red line is the fast moving average, and then a green line is a slow moving average. So we can see that when the red line crosses above the green line, it is a signal to sell. And when the red line is below the green line, it is a signal to buy. So we can try and see if this indicator can work as our baseline. So let us try to backtest and see. And when you're going to backtest, I want to urge you one thing, that you're supposed to move candle by candle, okay? You shouldn't be moving and then, so Control F, and then you can see that here the baseline is saying that we should buy, and even our primary indicator is saying that we should buy. So you put your entry order right up here, put a stop loss 1.5 of the ATR, and then you go on. So boom, if the price closes below the baseline, you close the trade, and then not it as a losing trade. So the price is still above the baseline, price is closed below the baseline, you have to exit that trade with a small loss. Okay, so then here the price is saying that, oh, we are below the baseline, so we are going short. And then the primary indicator is also saying that we are going short, because you can see the trade down here that the red line is above the green line. Okay, so you have to go short. There you have to exit the trade, then you have to re-enter, and then here you catch the move down. Okay, you see it becomes quite good. So right here, the baseline is saying that we should go up, and then the primary indicator says we go up, and then you catch the move up like that. So when you get a continuation signal, for example, here the price is still above the baseline, we shall be looking at it under continuation. Okay. So when you are going to backtest, you press F12 and then move candle per candle, so that you can be able to backtest your system very well. So you have a baseline. So here the price is saying that we are going down, and even the primary indicator says we are going down. So you put a short order and then wait. That one was a losing trade. So here we are saying that we are going up, and the primary indicator also says we are going up. So you can see that we lost. So we can see that here we have so many losing trades. It means that you have to change your primary indicator. So you go on and then backtest another indicator. So the indicator which is primary is supposed to be a little bit slower, but it shouldn't be too slow to get a signal. So we can try using another indicator. For example, maybe the commodity channel index. If someone knows the CCI, you can try it out. Period of 12 is okay. Normally we can use the default settings of 14. Then click OK. So you can see that this indicator is called the CCI, is a zero line cross indicator. And when this line moves above the red line, that's a zero line, that is a buy signal. Then it moves below that zero line, it is a signal to sell. Okay. Just want to make it a little bigger, bolder, and one can be able to see when it crosses. So right down here, you can see that from here it gave us a beautiful signal. All the indicators are saying that we are going to buy, and then we put a sell signal. So you can see the trade here, they are saying, oh, we are going short, but we made that losing trade. And then you can see the trade here, they said that we are going short. The baseline says we are short. Even the primary indicator says we are short, and then we take a trade and then make some profits. Here, you make a loss. So you have to choose an indicator which is a little bit, which can be able to filter out some trades. So if you backtest this trade and then you see that some indicator missed it, or a primary indicator said that here we are not going short, you should try to consider that indicator. So that is how you combine your baseline and primary indicator. So you have to come here, for example, I said short, and then you made it, okay? So here I said we are going to buy, and then maybe you made it, something like that, okay? And then we said that the baseline is supposed to filter our consolidations. So for example, here we have to use a different baseline maybe. So thank you so much for watching this video. Don't forget to subscribe. So I wanted to give you an example with moving average crosses, so that we get to appreciate moving average crosses in eliminating some consolidations. Let me see if I can get it. So we can try to see here, we can try to use this one. First moving average, let me say we are using 9. Let me say we are using 9. And then the slow moving average, let me say we are using 12. And then we set them to exponential. This is an indicator which looks like moving averages. So This is similar to putting in a moving average of 9 exponential and 12 exponential. So nothing to worry. The only change is that it gives you arrows. Okay. So colors. Okay. So let me try to zoom in so that everyone can see very well. So we are saying that every time we get a buy order, from that now we are using moving average crosses as baseline, and then we are comparing it with our primary indicator. Any you choose as your primary indicator. So you have to choose an indicator which gives you signals which are good. Okay. So here you have a buy signal. Okay. And the primary indicator is also saying that we should buy. So you have to take that trade, and then you would have gotten this move up. Okay. And right here for study purpose, still you can see that here you got a short signal, but then the primary indicator is also saying that we are short. Then you got this signal. So we are using CCI for the moment. So we can try other indicators. You can see that this retracement was missed by this moving average crosses. So when the first moving average is below or above the slow moving average, that's when you get a signal. So right here you can see that the red line was above the green line. That is a signal to buy. And then the primary indicator is also saying that we should buy. And then you can be able to get that wave up. So you can see that now, for example, right here, the baseline is saying that we should go short, and then the primary indicator says we are short, and then we lose that one. So like that, like that, like that. That is how we'll be able to choose. So you can try to figure it out with another what baseline. So for example, you can see that this and this do not work so well. Then you choose the primary indicator. Maybe say you use the MACD again. So let us try to backtest with this with the MACD page up. That's where the baseline is. So here you have a short signal, but the MACD says we are bullish, so we don't take this trade. You can see that now the MACD has filtered out this loss. We are going to take a loss in case this primary indicator said that we should go short. Okay, so here we have gotten saved from there, and then we've saved some money. Okay, so here we are bullish. Okay, then the MACD is also still bullish. So this was a losing trade. And then here we are bearish, but the MACD is still bullish. Here in here we have saved some money. So that is how we fight off the market. So you can see that here we are bullish, and then the MACD is saying that we are bullish, and then we would be able to catch this wave up and make some money. Okay. So which other signal happened? So you can see that here the baseline is, every time you look onto your charts, look at the baseline first. Because the baseline is the first indicator you have to look at. So you have to consider the baseline signal first. So here the baseline says we are short. What is the MACD saying? The MACD is saying that we are still bullish because it does not have bars below the zero line. When it gets bars below the zero line, that is when you get a short signal. So this was a signal not to buy. But here you can see that the baseline says we are going up. Even the MACD says we are going up. So you catch this wave up and then make some small money. So you can see that here the baseline is saying that we are short, but the MACD is saying that, oh my God, we are still what? We are still bullish. So you don't take this trade. Okay. So if you don't take that trade, what do? You have to wait until the MACD says that we are short. Okay. So you move candle by candle, and then you can see that the MACD got bearish from around here. And this was here. If you use a limit order, you would have saved this trade. So we shall be seeing how to use limit orders to save some trades. So here the MACD is saying that we are bullish, but the baseline is saying we are still bearish, and then we save this trade. You can see that here the MACD was reading bullish, but the baseline is saying we are still selling. So we have to wait that one. So that is how to combine your baseline and a primary indicator. So what we have noted is that the primary indicator shouldn't be too fast and it shouldn't be too slow. Then number two, it has, let me write them down so that you can be able to, it shouldn't be not too fast or too slow. Okay, that is one. I want you to note them. And number two, the primary indicator should filter out losing trades. It should filter out losing trades, at least some of them losing trades, given by the baseline. Since the baseline is the first indicator we look at. And then we say that this primary indicator, it can be a zero, it can be a zero line cross indicator or a two line cross indicator. So we say it shouldn't be too fast or too slow. It should filter out some losing trades. And then we have to keep on changing, okay, until you get a best primary indicator. You have to keep changing till you get the best primary indicator. The other thing you have to note about this primary indicator is that with what have we talked about? What else? Not too fast, filter out losing trades. It has to skip some consolidations, skip some market reflexes, skip some market reflexes. Okay, so we are saying that this primary indicator shouldn't be able to give you some market reflexes, and it shouldn't be able to give you some market reflexes. Okay, you should be able to avoid them. So, for example, right here, you can see that the market was trying to reverse, but the MACD says no, we are still bullish. You can see that here the market tries to reverse, but the MACD says we are still bullish. And then the same thing happens here. You can see that the baseline even gave you a signal to sell, but the MACD said we are still bullish. So that is what I'm saying, that the primary indicator should filter out some market reflexes. So basically, those are the characteristics of a good primary indicator. That is number one thing you have to note. And then you have to backtest it. And it should also give you at least a win rate of 70% so that it can be able to match with your baseline. So every out of 10 trades you make, it is supposed to make 7 winner. Okay. So thank you so much for watching this video. If you've not yet subscribed to the channel, please do. If you've not yet understood anything, and please, I want you to comment, and I'll be able to reply to your comment genuinely. Okay, so my name is Uzomchore. Please like the video and also try to share so that you can be able to support my work, and I'll also be motivated to come and teach more. Okay, thank you so much. Bye bye. May the markets be with you.